Every morning we ask, where's the money? And today we're following two big headlines that could really impact the cost of borrowing money.
Our Marcella Robertson is here now with what you need to know. Good morning.
Yeah, good morning, guys. All right, first let's talk about interest rates. We know the Federal Reserve will announce whether it's cutting rates at 2 this afternoon. Experts, they are predicting the Fed could lower its benchmark rate by about 0.25%, which would be the first cut since December. And of course, a cut like this makes it cheaper to borrow money.
They set the price and supply of money. That literally affects how much we pay for our mortgage, our credit card, our auto loan.
Now, the other headline we're following is the biggest drop in credit scores since the Great Recession in 2009. The national average FICO score has slipped to 715. That's down 2 points this year. It's the second year in a row we've seen scores fall, and for some, this could push loan costs in the other direction.
The higher the score, the cheaper it is to borrow, and vice versa. Lower scores make it more expensive to borrow.
All right, so why are credit scores dropping? That's the big question. Well, a big reason, the return of student loan payments after years of pandemic forbearance. Missed payments, they are showing up again on credit reports. Right now, more than 10% of student debt is 90 days or more delinquent. And you add in rising balances on credit cards, auto loans, all plays into that. You can see the pressure mounting right now, especially for Gen Z borrowers who are just starting out. So guys, of course, a lot of things factor into your interest rates and how expensive it is to borrow money, and credit scores are a big part of that.
They're just getting squeezed everywhere. Marcella, what are some steps people can take right now to try to protect their credit? Yeah,
well, it is advice we repeat over and over. Couple of things. Pay on time. Every time. Even one late payment can hurt you. You can, best bet is really just set up auto pay if you can. Another thing is to watch your utilization on your credit cards. Keep balances below 30% of your credit limit and paying down before your billing cycle closes. That gives you a little boost as well. And another thing is just check your credit reports. You get one free each year at annualcreditreport.com, and catching errors early before they hit your credit report can really help you and in all your interest rates. So small, consistent steps like this can really make the difference between paying that higher interest or saving money when you need that next loan, and you never know when that'll be, guys.
All right, Marcella, thank you very much for the information. 6:44 is the time right now. We've talked about that free credit report that Marcella just mentioned. You can find a link to that by texting the word money to 202-895-5599.